Hello, folks, and welcome back to another edition of Money in Motion. CJ here, as always, joined with Monte. DXY turning a little bit today as risk assets are rallying. So excited to break down that price action and much more. But Monte, how are you doing? Anything that's is striking your eye this morning?
Oh, sorry, I was muted that entire time. Wow.
I thought you were
Um,
outside. My bad. Should have said something.
um, yeah, so that proves that CJ doesn't even listen to me when I'm talking. He just spaces out and does his own thing. But anyways, regardless, apologies. I'm doing good. Hope everyone's doing great. See you all in chat. Bob, sell me your assets. Ryan, Jenna, Roz. Hope everyone's doing well. I'm doing quite well. I think that today's gonna be a good day. I also see some of you guys talking about the Ave trade that CJ and I mentioned yesterday. Um, I am going to go ahead and let you know that I'm exiting that trade right now, or I'm going to exit it here in the near future. I'd like to start by just bringing that chart up because it is something that was posted in our community and I mentioned yesterday during our show. So, see, we got some nice continuation from Ave, but really, I do think we're going to hit some resistance at this critical level of $65. That was my first target, and I think that is still a valid target. But what you'll note is that today we still haven't gotten above yesterday's wick, which tells me that there's a lot of sell pressure at this right sub $65 level. So I'm more than happy to take profit here. We talked about it yesterday, opening up maybe like a 3x levered position. That worked out really nicely. So I'm content with exiting that trade. However, the one caveat is I might be looking to re-enter if we get the big boy Bitcoin to break above the oh so critical 27.5 level. The 27.5 in my mind, like when I think of the most critical level for Bitcoin, for some reason that's what level comes to my mind is 27.5. It just like we've had so much Bitcoin exchange hands at that level, and it's acted as both support and resistance on multiple occasions. And here it's acting as resistance, right? So the way I play basically everything, and this is how I'm shaping my thesis, and I'll let CJ get to the traditional side of things here in a minute. But for Bitcoin, it's really simple for me. If we break above 27.5, I'm going to be looking to take some risk, not just with Bitcoin, but with the altcoin market as well. 27.5 is a level that's held us back. Even a move up to this candle here, like 28.1, I think would happen very quickly. But ultimately, I do think that if we close green today and we manage to clear the 27.5 level, that is very, very critical. I think we see continuation up to 30 and we see a lot of altcoins run. That being said, look at this watch list. Like Aave is really the only asset that's green because it was, a lot of short covering. And that was the basis for that trade yesterday. So it may not pump as much as Bitcoin if Bitcoin does break above that 27.5K level. So that's why I'm thinking about exiting this position and perhaps looking to allocate more towards this as it breaks above 27.5, because I think above that level, we could really see this thing start to run. And like you said, DXY pulling back. So the stars are aligning for a move to the upside for Bitcoin. And that gets me a little bit excited. So we got to clear 27.5. If there's anything to take away from this episode, just remember 27.5. Nail that into your head. If we get above it, I'm pulling the trigger.
All right, good. Good. Okay, let's go to the traditional side. Yeah, I mean, it's hard to really judge anything today until we close. Just I don't know what FOMC will bring, but probably get a little bit of volatility. Russell leading this morning. Nasdaq was actually leading from the downside yesterday, like on the rebound. So that was kind of notable. DXY, of course, I think is an interesting time. I mean, we've talked about this where it was like basically all the other major G7 currencies were back to neutral in terms of their positioning. You saw, gold obviously squeezing a couple days ago. So decent place here for the dollar to roll over, in my opinion. And I think, what we've talked about in terms of like the best way to play that, aside from just shorting the dollar, I would rather like take longs in, New Zealand dollar and Australian dollar. And those have, performed really well at the backs of this dollar kind of depreciating. So those have been, like the most crowded on the other side. So maybe like the fastest horses in the other direction, so to speak. But yeah, that's basically it in terms of like macro assets. I'll pass it back.
Yeah, yesterday, you talked a lot. We talked a lot about some of the big names in the Nasdaq, including things like Google, which are making 52-week highs. Are there any assets, now that we're seeing a potentially positive day in the equity markets with the DXY sliding? What do you think about, perhaps taking a shot on some of these stocks, things like Microsoft, things like Apple, things like Amazon? I know you had Amazon on your watch list as one that could be a potential buy. But what are your thoughts on some of these big names here, like the Magnificent Seven, as some people like to call them?
Yeah, I don't really trade a lot of stocks, but probably Tesla.
Tesla?
Yeah.
Yeah. Yeah, I'd agree with you. And I think that the last few days of price action for Tesla have been very interesting. But overall, I think this is an encouraging formation. You could argue this is a cup and handle here. I think maybe did you make that point already? And did you do like the extrapolation? Whatever. Either way, like I think that this thing, breaking above 279 here and getting into that $300 level would be a big step forward. It really did take this hit hard, harder than the rest of the equity market, or at least the rest of the Magnificent Seven. It sold off hard, so don't be surprised to see it rebound even harder. And I think that's kind of what we're seeing there as well. Also, I will mention that Google, it's so close to breaking into a 52-week high that I don't know. Like if you compare this chart with Tesla, like I think that this is the much better looking chart in terms of potential positive price action and upside opportunity. I don't necessarily want to be trading like Google right now as at the top of its range, kind of putting in this. It's clearly struggling to get above 139. But that being said, if it does break above that level, then you need to reconsider. But for the time being, I'd agree with CJ. When it comes to the Magnificent Seven, I think the most appealing stock right now is Tesla. And one thing I will say is that like I don't expect this to go up right away. So maybe consider like some sort of calendar spread or a call spread that gives you a little bit of breathing room, because don't be too surprised if we get caught with some resistance here at 279, get rejected, see a little bit of consolidation before breaking higher. I think that's a very plausible scenario. And if you just buy naked calls, that will hurt you very badly. So that's not the approach I would take. If anything, just buy outright stock or, use an option strategy where you minimize the weight that data has on the pricing of your options. And if you need any help with that, of course, just drop in the Discord and shoot me a DM. I'm more than happy to help you set up that position. So.
Yeah, I mean, it looks like we're just going to see some continuation, at least for the short term. I mean, I don't know. I don't have much to add today other than kind of the short positions we talked about in the community, but, kind of close those. It's just there hasn't been a lot of good asymmetric positioning wait for Bitcoin to rebound past that critical level you had talked about, Monte. But,
Right.
I'm not really doing a whole lot, at least when it comes to the futures markets right now.
Yeah. Yeah. And I think that's a smart play. There's not any clear directionality really. I think like even with the DXY.
I think if anything, it would be DXY if I were to put
Right.
on a trade.
Okay. Yeah. That's I mean, like and
Not
for me,
even not even not even DXY, just the land down under currencies, and that would be it.
yeah, sticking with those. Okay, I like it. Yeah, and I mean, we haven't really talked about it a whole lot, but like the euro dollar, I mean, it got beat up so bad after the European Central Bank hiked rates, but now it's like coming back. And um, what was I looking at? I forget. Yeah, the 200-day moving average. I think we see this come back up and test the 200-day moving average. If that is the case, that spells at least neutral to bearish price action for the DXY. If the euro is going to climb to this 108 level, the dollar is not going to rise. It's just the euro is too heavily weighted in the basket of the DXY for it to make a move if this move does come to fruition. So we have this room for the euro to move after it's been beaten up by that European Central Bank rate hike. And I think that also is something that should be taken into consideration when you're analyzing the dollar as well. So I think that, we do have, with the dollar turning down, the euro dollar turning up, equities looking decent, Bitcoin looking decent, all things considered. I think if we get above that critical 27.5 level, I'm really going to start taking some risks. So that's what I'll be watching today.
Yeah, last thing last chart I'll share before wrapping up, unless you have anything else. Just hitting that rate breakdown level, I would say, so in terms of like futures markets, yeah, I like longs countering the dollar in things like, New Zealand, Australian dollar, and then potentially to hedge that, although that wouldn't be a hedge. Never mind. But you're seeing this being a breakdown. I was thinking, commodities maybe a little bit
No,
inverse correlation to the
I
dollar,
I understand your thinking. I understand your yeah.
But at a certain point, you go down a couple too many steps. So yeah, those are some interesting charts.
Yeah, I think that's soybean oil and heating oil. I know you've been like kind of frustrated with these, but like this right now to me,
This one's worked. This one's worked. Heating oil, yeah, been very frustrating. This one's actually been like the path of least resistance, though, for sure.
Yeah, but I think like these last 3 days have been probably the most like encouraging for entering a short position. Like you had pointed out, we had that trend shift, came back up, tested the moving average, confirmation of weakness. Now, really, all you need to see is a breakdown below that wick that was set like last week. I think if we break down below that, it's going to be a continued kind of secular downtrend for soybean oil.
Yeah, I like to compare some of these historic boom bust cycles. Like if we look at, let's see, I almost even want to go back further than 1 week, but typically you have regressions like $45. I mean, we had that kind of, but we'll see. But definitely could be an interesting asset for macro mean reversion, just because there's basically no upward drift other than just a little bit of inflation, and then it looks like people really started speculating into this market past decade or two. But anyways, yeah, that's all I have to say on that chart.
Yeah. Yeah. Okay. Well, that's about all I got for today. I think that, I think today's market close is going to be very, very important. So we'll keep you posted as always in the Discord. And if you would like to, definitely check out Trade the Chain. You get 14 days free at tradethechain.com. You get access to the sentiment dashboard, which tells you what's hot, what's not. Also, you get access to the community Discord where we share our trade insights with the community, and also Nick does as well. And we have hundreds of other really intelligent traders sharing their insights. And you can try that for free for 14 days at tradethechain.com. And also, please don't forget to like and subscribe. It really helps out the channel a lot, gets more views. And lastly, thank you for everyone who participated in the chat today. Really appreciate you guys. And yeah, that is all we got for today. So have a great rest of your day. We'll see you again tomorrow. Take care and happy trading.